Hello, everyone.
Yay.
Robin and Anna are here back together again.
Yes.
No home inspections to get in the way today. And we are here today to talk about a summer vodka fizz, which actually looks like pretty cool ingredients, and real estate strategies for real estate tax strategies for real estate investors, which I like to call tax mitigation or reclamation.
Sure. We'll go with that.
All right. So we are going to start with the best part of the show, which is the cocktail. And this cocktail is actually pretty simple. I'm going to make 2 of them. Is 2 ounces of vodka. It's not a lot of ingredients, which is kind of what makes it nice, is because it's not a lot of ingredients. So it's pretty simple to make. You're not looking for a bunch of extra things. Fresh squeezed
lemon juice.
Mm-hmm. Which I squeezed and strained myself to get all the pulp out. And then this is...
Are you doubling?
No, not right now.
Oh, okay.
And this is mint syrup that I also made myself, which was simple. I actually just picked some of my mint from the garden, and then I put it into a pot with sugar and water, and I just kept reducing it until it became syrup.
My exercise for today. Let's get this party going.
Right.
Before we start talking about taxes.
Right. And of course, you can garnish it. You can garnish it with a lemon. You can garnish it with a mint. You can garnish it with a flower. You can do anything like that.
Yeah. I'm really curious of how much the mint will come through.
And then you want to top it off with a little bit
of soda.
And that's where you get the fizzy part from. And actually, I should have grabbed some flowers, because when I do my garden in the summertime, I always make sure all my flowers are edible. And I should have brought in some flowers.
Because this would be a perfect setting for the flower.
This would be a perfect setting for the flowers.
Yeah, because it's like, it looks a little bit plain. Oh.
There we go.
Vodka.
There we go.
All right.
So here is our summer vodka fizz.
Cheers. It smells good.
It's a hint of the mint.
Yeah.
It's not too strong.
You probably can decorate with the mint or muddle mint. Muddle. Yeah. It's very refreshing.
It is very refreshing. And honestly, it's not that alcohol forward, which is what I like about it.
Yes.
And weirdly, it actually has a bit of a sweet taste, which has to come from the syrup. Because I actually thought it would be more sour with all the vodka in it, which was actually kind of nice. It's super refreshing.
Yeah,
I would easily make this one again.
It reminds me of a light version of a lemon drop.
Yeah.
It's kind of like, like it's a lemony, but not so sweet, not so strong.
Yeah.
Like really like chill drink. Yeah.
Exactly.
It would be good for the summer. Like patio.
Absolutely. So let's dive into what investors love is keeping more money in their pocket.
Yes. So it all depends on what type of investments you do. There's lots of different kinds. So first, I think we're going to talk about rentals and short-term rental, long-term rental. Those investments, you have to remember, like you don't need to hide your money. You just need to realize that you do have an expenses that you can write off.
Keep talking. We have some unruly audience members. Keep talking.
The dogs. Yes. So sorry, I lost my straight.
Different kinds of
my thought, process. But it's nice to have the rental income, but you have to remember that you also endure the expenses during that period of time. So you can write off things like mortgage interest rate. If you spending money on any kind of maintenance, replacement, repairs, even like if you have loss of rent, like if or you have tenants that damaged things and moved out and didn't pay, those all things you can write off against your income, which is reduces your income, hence you pay less tax.
So here's one thing I always like to tell people is we make about $200,000 a year in short-term rental properties. And based on all the taxable deductions, by the time we're done, we actually have the ability to show the government that we've made no income on those rental properties because these are all legal tax deductible items.
Yes.
So your mortgage interest is tax deductible. The property taxes are tax deductible.
Insurance,
condo fees, utilities. Even if you're doing short-term rentals, and you have to use platforms like Airbnb and VRBO, you now have internet and a cell phone that become tax deductible expenses because you need them to maintain the money. So the biggest thing you have to remember is if you have to spend money to make money and you're in a business like a short-term rental or real estate or something like that, that becomes a tax deductible expense. So for me, in our cabin in the Crow's Nest Pass, we have a fridge and it says take a bottle, leave a bottle, unopened bottles only. Now what we do is we fill that fridge for people.
Like with wine.
With wine.
Bottles of wine.
And we do that because when people come out there, they just want a night, sit back, relax, have a fire, and drink a bottle of wine.
Yeah.
And then they can replace it later throughout their stay. Now, unfortunately, not everyone replaces the bottles of wine. So we now get to buy wine at the Crow's Nest Pass to fill our value added feature for our guests. And that becomes a tax deductible expense. Not to include furniture we buy. Sometimes we have to buy tools to repair the property to keep it maintained. If we have to replace the shingles on the top of the roof, that's a tax deductible expense. If we have to repair siding, anything like that, build a fence, all those things are tax deductible expenses to reduce down your income. Even mileage that you can that you take going out there to maintain your property becomes tax deductible. The other fun part is if you own a property outside of the country, you are allowed twice a year to write off the trip to go view your property.
Yeah, like your airplane tickets, for example, meals on the way, things like
that. Car rentals all become tax deductible expenses, but it is to a maximum of 2 times a year. So we have one place in Mississippi and one place in Costa Rica. So twice a year, we can write off the expense of the trip to go to Costa Rica to check on our property and make sure that our investment is being maintained. Those all become tax deductible expenses. So it's, believe it or not, people always worry about, well, if I make more money, I'll pay more taxes. Not necessarily. What you're going to do is you're going to start taking things that you already have and you already do, and now you're paying them with what I call our pre-tax dollars. So really you're paying 40 or 30% less, depending on your tax bracket, on normal daily items like your phone and your internet and computers and trips to Costa Rica or trips to Mississippi.
That's right. And I think the most important part is like make sure you guys keep all the receipts and really good the paperwork, because if you ever get asked, you have an explanation and you can show how that expense was utilized to make income.
Because Revenue Canada doesn't just take your word for it.
Yeah, like sometimes, I'm not sure, again, we're not accountants.
No, always talk to your accountant.
You have to remember when you do spend money on like big expenses, maybe like furniture, maybe it's a specific building that is done. It could be, you can do a depreciation value on it, which is kind of creates like a loss against your income. So I know for me, like for like real estate, when you buy computer, printer, those are technically equipment for your business. So we do depreciation, and accountant will do that for you.
But your accounting fees now do become a tax deductible expense, as do any legal fees, anything like that. Even when you sell the properties, absolutely. When you sell the properties, your realtors become tax deductible expenses. All of those things now are tax deductible.
Legal fees and things like that. Yeah.
The other thing that become tax deductible still is your cleaning fees. If you're paying someone to clean your property, those fees are tax deductible expenses as well. Inventory that you may need for the property if it's a short-term rental. So all of those things you now can reduce off of your income. Shampoo.
Same goes for like landscaping, snow removal, cutting grass or whatever, things like that too.
Absolutely.
Yeah.
So, and then you can do what are called capital improvements. Those become tax deductible, which is the roof, the siding, and all the other fun stuff. Now, what's fun about this, and this is the number that I love the most, is that if you bought a house and lived in it, which has no tax deductible expenses if you don't run a business out of it, and you just live in that house and pay your mortgage off, your rate of return is about 5% per year. But if you borrow the money out of that house and you buy a long-term rental and allow someone else to pay down that mortgage in a long-term rental, you will see a 37% rate of return on the money that you borrowed. Because if you borrow from your mortgage or your house equity, the interest on that money is tax deductible, plus the interest on the mortgage of the new property is tax deductible. So based on all the write-offs that you get, not to include the property and it's increasing and stuff, it now goes up to a 30% rate of return annually. Now, if you borrow from the equity of your home and you buy a short-term rental, because they have higher rates of return, it goes to a 43% rate of return. Now, of course, everything comes with risk, and everything has more and more risk. So buying a house and living in it and doing nothing, 5% rate of return. If you're happy with it, that's okay. There's nothing wrong with that. Very low risk. Buying a house and doing a long-term rental, that has a little bit of risk, but it's about a kind of mid-range risk. And they say going short-term rental has a higher rate of risk. And I think it really depends on where you buy, how it's zoned, all that kind of stuff. And those are things that we can talk about with you when it comes to looking at what kind of investment portfolio you want, because all of those things come with different levels of risks. And based on that, we can decide what your risk is versus what your gain may be, and if that's something that you want to take, because everybody has a different tolerance for risk. That's right. None of them are wrong. All of them are right. It's just what's right for you.
Exactly. And we also make a plan in terms of like, what is your end goal with the properties? Is it a positive cash flow on monthly basis, or is it more of a holding property that maybe you want to leave it for your kids, or it's a property that you're gonna rent, you want to hold because that area is gonna increase in value in the 10-20 years, and that's where you're gonna make majority of your profit. So there is a different ways of planning your investment as well, which creates more income, meets your goals, you make your money, and you pay less tax.
And it's entirely up to you as well. They're powerful tools for investment. So you just have to decide which one's right for you. But if you actually talk to, it was Franklin Roosevelt that said real estate was one of the best investments. It was, I know that there was just a meme that went on to Facebook that was also, it was two very wealthy people. And he said, if you had $1 million left and could only invest it in one thing, what would you invest it in? And the guy said real estate. Real estate is a pretty solid investment because they're not making any more land. It's not going to get any cheaper. The dirt is what goes up in value. And there's a lot of taxable benefits when purchasing real estate. And the way I explain it to my mom is, if you got a $400,000 loan and somebody else offered to pay it off and ask for nothing in return, would you let them? And of course she's like, well, who would do that? I said, renters. That is what renters do. They pay off your loans and ask for nothing in return, but to live in a house that you don't need anyhow.
There you go. Yeah. And I had a thought, and again, my brain was like foggy. I'm still sleeping, I think.
It is always important, though, to talk to a tax professional and make sure that you are clear on what is and isn't allowed. We are real estate agents, and we're only talking from our own personal experience, which as realtors, and especially in how long we both have been in real estate, realtors have a habit of dabbling in flipping houses, renovating houses, building houses, renting houses, long-term rentals, short-term rentals. Over our career, we do it all.
That's right. And we can do also, like, we can look at your calculation plan in terms of how much down payment you need. Do you need to put that much money into the house? Sometimes you can buy more, like, use the money for multiple properties versus putting all into one. Like, not just your own property, but multiples, right? And of course, we will talk about with you guys, making a plan what's better for you, if it's a condo, if it's a house, fully furnished, not fully furnished, like all the kind of things we discuss as well. And it all depends on your end goal.
And also, too, diversification is always good. Yes. Put a little in stocks, put a little in real estate. But statistically, real estate's even leveraged outperforms stocks year over year. Hence why you have all of these millionaires saying that's where they invest their money.
Yeah, and I like how you always say there is no bad time of buying real estate. There's a bad time of selling real estate, because the market does go through its waves. especially in Calgary, right? Like in Alberta, we have our own little bit kind of bubble market that we live in, despite of what's happening nationally or internationally. So it's always good to check what's happening in your local market because we're very different from Canada or what's happening on international, like globally as well.
And keep in mind too is if you're watching this from a different province, of course your provincial rules may change or local rules may change. I will say this was one thing that the CRA did in the last few years is if you have a short-term rental that is non-compliant, the CRA will not allow you on non-compliant short-term rentals to deduct anything from your taxes.
Yeah. So, and like for the non-compliant, number one, especially in BC, as we know, you have restrictions on how many short rentals now available in certain areas, and you have to have license displayed in the front of your property. So,
yeah. And if you're doing short-term rentals, never discount the fact that the jurisdiction may require you, so the municipality may require you to have a business license, and you want to 100% check that. And the reason why is because I actually had one in the Crow's Nest Pass starting in 2017, and they didn't start regulating them until about 2023. And because I was the only one in my area with an actual business license, I got first crack at getting the short-term rental permit, and it meant I had to shut down a bunch of other short-term rentals around us, and it was unfortunate, but it was because we always stayed compliant. So if they are in your area and they require the business license but have not put in rules yet, getting that business license may save you or give you an opportunity that nobody has.
And it's not expensive.
It wasn't.
Thinks it's thousands.
It was like $175.
It's like literally like $100. Like depending on your municipality.
Totally. Yeah. So that's exactly it. Get the business license, be compliant. You know, honestly, at the end of the day, it may save you more than it's going to lose you.
Yeah.
So now,
lots of information. Time. Yeah, price time. So this is our last month as of season 6 coming to wrap it up.
I'm so excited for season 7.
I know. So, but we will have a show the first week of July. By the way, it's Canada Day. You know that?
Not right now.
No, but our show is on Canada Day.
Cool.
Yeah. So
that means extra drinking.
Extra drinking. Yeah. So, but we're gonna be giving the prize away. It's a really cool whiskey decanter, or what is it? Dispenser.
But we're still doing in between now and Canada Day.
Oh yeah, but that's our last show. When we
our last show is on Canada.
When we give the prize away.
That is a great day.
You get a set of 4 of matching glasses that kind of goes with the decanter, like really cool design. So the way you guys gonna win this prize is by following our show on all social media platforms that you see, obviously Facebook Live, Instagram, TikTok, LinkedIn, YouTube, and anything else? YouTube. So every time you see the
Twitter, show, or X, it's X now. I'm making myself sound old.
So if you put your name, if you tag a person, even if they just like the cocktail, it's like, check out this recipe. Your name gets entered to win as many times as we see throughout the month of June. And if it's not too late, if you comment below any of our videos and suggest season 7 topic,
I give you 5 entries.
And cocktail.
Yeah, if you suggest a cocktail, 5 entries.
So this way, Robin and I don't have to work so hard on making stuff up. And we already will know what you guys want to hear. So please comment below.
So one thing I'm going to learn between now and season 7 is how to fat wash alcohol. I had a bartender explain it to me.
Sorry, what is it?
Fat washing. We had a ton of fat wash cocktails last night at Gwen's birthday.
Oh, so is it a good thing?
It's super cool.
Oh,
so I'm going to learn how to fat wash cocktails for next year. For next season.
I had no idea.
It's so cool.
That we were having it last night.
We did this one at a restaurant.
Is that why I feel so skinny?
No.
No, okay, it's not
fat washing doesn't make it like that.
Oh, it's not like that. Okay.
No, but I'm gonna learn how to fat wash cocktails.
Okay, so that's could be a great topic for our season 7 show because I obviously don't know anything about it. But in the meantime, the market is quite busy. It's not everywhere the same. It all depends on the area and what you're selling. Sometimes it's very busy with multiple offers we see, some not so much. So if you guys thinking of selling or buying real estate, even going into the summer, please contact Robin and myself so we can educate you on what to expect and how, like, what you can get for your place, how fast you can sell it, what do you need to do. If you're thinking of preparing it for September, this is also a good time to start thinking about that, because sometimes it takes sometimes.
Also, too, is just if you have questions about real estate, we love answering people's questions. We like giving you the right information because unfortunately the internet is used to spread too much of the wrong information. Right? Don't believe everything you read. Don't believe everything the media says. If you want to know what's really happening in the market, we will give you a realistic opinion of what's happening. And
Exactly.
we won't over fluff it. We won't under fluff it. We will be honest with you of the market and how it affects you.
Yeah. Thanks for watching.
Thank you. Have a great day.
Bye.